Hello and welcome to CryptoWeeklies. In this video, we discuss Akash and Akash network and its token AKT, conduct machine learning based price analysis, technical analysis, regression analysis, and accumulation strategies. None of the content is financial advice. Over the last 24 hours or so, Akash has been one of the rallying cryptos. But in terms of tokenomics, you can see that there the token has about a 4 million max supply, out of which 250 million is in circulation, so little over 62% of the max supply is in circulation, which again above 60%. That's when you can see that the growth in price and the growth in market cap go hand in hand. But one concerning thing about Akash is currently ranked number 99 by market cap, and not too long ago, that is this token was ranked number 69 not too long ago in May of 2024. Back then, the market cap of Akash was and its token AKT was at around 1.12 billion. Now the market cap is hovering at around 780 million. In terms of the technical analysis for AKT, this is at daily level. You can see the blue line, which when turns into orange is when the prices are lower than 200-day moving average. The green line, when it turns to red, is prices are lower than the 300-day moving average. Historically speaking, this particular crypto had two oscillations, first back in 2021 and then now again in 2024, slightly lower high. So in 2024, right now the prices are close to the 200 day moving average at around $3.26 price at around $3.14 right now. The about 10-12 cents lower than the 200 moving average. The 300-day moving average is all the way at around $3.57. So about a 30 to 35 cents lower than the 300-day moving average. So those are the two key numbers to watch for. In terms of the weekly price action for Akash and its token AKT, the prices are now above the 20-week moving average and 21-week exponential moving average. That means if the prices were to close at this particular price point for this week, that would represent a first weekly candle since about June of 2024, where the prices are above the 20-week moving average. Now that we have covered the TA, now we'll focus our attention on the on the overall. This is the overall risk in the market, by the way. Between right now the risk is less than 0.4. That means the top 100 cryptos by market cap are in this green zone. Together, when they are in green or blue zone, that's a great time to DCA in the market. When they are in orange or red zone, that is where DCAing out of the market makes the most sense. Yellow is kind of a neutral territory. We did have a couple of yellow days in 2024, but not that much. First in the middle of March of 2024, and then back towards the end of the March of 2024. So now currently the risk levels are at around about 34%. Now if we focus our attention more towards our website, which covers not just Akash but top 100 cryptos by market cap. This is the machine learning based price forecast for Akash, based on the weekly price action that we have fed to the machine learning model trained on ARIMA, LSTM, and XGBoost. The three scenarios: the first is the trend based model. The trend for the model forecasted is upward trend in this pink line. That means devoid of any bullish or bearish sentiment. The price in itself has a upward swing, which is a good sign. In terms of the bull case for Akash, for this between now and end of April of 2025, between $3.89 to about $10.80. This is the non-parabolic or non-euphoria bull case for Akash. The euphoria bull case is slightly that is 2 standard deviation, at around 2 standard deviation, that ranges between $4.40 and to about $22.87. That's the like a euphoria or a parabolic move if that is in store. The base case is it around between, without any biases, between to the bullish or bearish side, is between $3.40 and $4.80. If in case of a major crash in the coming weeks or months. The price support is at around, per the forecasted support is between $1.62 and $3. This is again, the purpose of this is like, if the market were to throw a bull scenario or a bear scenario, what are the ceilings or floors? That is the purpose of this forecast. No one can accurately say if the market has to only go up or has to go only down. That's why the purpose of this forecast is to get ready for all the possible scenarios at using different machine learning and different standard deviations to basically analyze what the market could do in the next 6 months time period. So this is again available in tabular format as well. At the bottom of the screen, the base case is this column in middle. To its left are the 3 standard deviation bear cases, to its right are 3 standard deviation bull cases. In terms of, now that we have covered Akash on its machine learning based forecast, this is the polynomial regression analysis. The pink line is the polynomial regression function wrapped around Akash's price action. You can see this is a clear case of oscillation. Right now the prices are in this downward slope of this oscillation, which represents the fair value at around $1.40, but the price is much higher than the fair value. So unless there is a change in the shape of this oscillation, the prices have this downward bias. But you can see again, if the upward trend in the market were to continue, the regression based valuation, the shape of this regression based valuation would have to kind of change its shape. In terms of the SMA model, the relationship between the price and 20-week moving average, based on that price, the daily price, based on that relationship, the daily prices are color coded on risk levels between 0 and 1, the lower risk levels over here. The key idea with this model is to either avoid DCAing when the risks are too high, so that accumulation is not major accumulation is not happening when the market is overheated. You can see, if the hypothesis is that you'd only DCA when the risk level is less than 20%, you are essentially avoiding these moves, like DCAing during these moves and DCAing close to the bottom. But again, the risk with this model is DCAing throughout the bear market and not throughout the bull market. Again, that's why no single model can serve all the use cases. This is just to identify the bubble risk. You can see the bubble right now, the prices are not in a bubble. And in terms of this model forecasting, using this model, the price action between $5.59 and about $6.77 is kind of a moderate to high target, and some of the lofty target for Akash and its token AKT is between $7 and $7.50. So this is you can see how this is calculated on the website as well. This is the SMA model. The DCA model is the replica of the regression analysis that we saw, then oscillation over the regression analysis over here. But instead of a weekly level, it's at a daily level. Based on that relationship, the risk levels are identified. Per this model, right now the risks are kind of elevated because the regression function has this downward slope. Per this model, again, the price is kind of like at a local top per this model, and per the time weighted average price model, currently the time weighted average price is around $2, which represents a risk of accumulation at around about 47%. We have a composite of these 3 models in our estimated bull case, which kind of tunes out the noise from idiosyncrasy of one single model, and based on the 3 models and their risk reward, the weighted risk is at around 68%. The estimated bull run peak for Akash per this model is around $4.38, which is kind of close to the fair value of our machine learning based model. So right now the only bullish scenario exhibited by any model for Akash is first is the SMA model, and then this bull case for Akash between now and end of April 2024 between almost $4 to about $10, $11 at one standard deviation, and the two standard deviation models between $4.40 and $22.87. So with this, I'd like to conclude the video. Hope you enjoyed the content. If you did, please subscribe to the channel. Also give this video a like, and hope to see you again tomorrow. Thank you and have a nice day. Bye bye.